We've reported a solid set of numbers today, with EBITDA of £1.4 billion and 11.2 of earnings per share. We've made significant progress in our journey to make Centrica a more predictable, higher quality business. We invested over £1.2 billion in 2025 in strategically important assets like Sizewell C and Grain LNG. And we've made strong progress in our meter asset provider. And we've ramped up our technology-led transformation programme, underpinning future growth. We remain firmly focused on delivering value, and our strong balance sheet gives us the financial platform to execute on our strategy. We've balanced investing with returning £1.1 billion to shareholders in the year, including a 22% increase in our dividend to 5.5p. And we've now bought back a quarter of the company since 2022, including over £800 million last year. Now to the results in a little bit more detail. Retail EBITDA was almost £600 million, including pleasing growth in UK Home Services as we build on our operational strength to deliver better commercial outcomes. There's a lot more to come from this business in the future as we embed the benefits of the transformation programme. UK Home Energy Supply delivered a resilient result. Warmer weather and switching to fixed price tariffs weighed on the performance. But we also saw benefits from the phasing of revenues and costs from earlier periods, a natural dynamic reflecting the through the cycle predictability of this business. In optimisation, EBITDA of almost £200 million reflected continued strong performance in LNG and renewables route to market, offset by challenging market conditions in gas and power trading. We've transformed the LNG portfolio in recent years. We're now 100% hedged until 2028 and over 80% until 2030, protecting the downside and retaining valuable physical optionality. At the same time, we retained our discipline in gas and power trading, consciously reducing risk and preserving capital. Infrastructure EBITDA included a better outcome at Rough, driven by a strong focus on maximising revenue and cost efficiency. Lower achieved prices and production outages later in the year reduced earnings from Spirit Energy and nuclear. The contribution from our new regulated and contracted infrastructure assets was small in 2025, but will grow substantially in coming years, underpinning significantly higher earnings quality over time. As we pivot our infrastructure portfolio, we will continue to grow in retail and optimisation, supported by our transformation programme. We made good progress last year, and by the end of the decade, we expect to reduce OPEX by £500 million in real terms. That means nominal costs should be broadly flat, even as we grow, underpinning our confidence in delivering £1.7 billion of EBITDA by the end of 2028 and £2 billion by 2030. And we hope we can do even better. That allows us to look to the future with confidence, and our financial framework is unchanged. As we grow our sustainable earnings, we can continue to progress our dividend, support the next phase of growth, and return surplus capital when it arises. Thank you.